You guys to give him a huge round of applause. He has the task of taking you through the last talk before lunch. This is a challenging session, okay? Any of you have ever given conference talks and whatnot, you'll know that this is a very, very challenging session. Mr. Jo Yan Lim, Head of Corporate and Commercial Practice Group with Ma Quing Wai and Associates. He's going to tell you a little bit more about the do's and don'ts, rules and regulations and policies that every fintech geek should be aware of. Ladies and gentlemen, please give him a huge round of applause. Show him some love.
There you go, sir. Hi, everyone. Yeah, it is going to be a very challenging session. I'll try to keep it short and punchy. So let me just start off with some structure. I'm not going to go too much into the rules and regulations, the legislation on fintech in Malaysia, simply because we have a regulatory sandbox that is in the process. But I'll just share some observations about the sandbox and the interaction between various regulatory authorities in the slides to come. What I would like to share are some do's and don'ts from a commercial perspective that are legal in nature. So it's going to be, I'm just going to try and be as chop as possible. If you've got questions, you can ask me at the end of the session. So who are the regulators in Malaysia, right? Often you've got the Central Bank of Malaysia, you've got the Securities Commission. The Central Bank is here to regulate things related to the financial industry. Securities Commission, often we know that they regulate equity crowdfunding. They are also going to regulate P2P lending. Competition Commission. Now, I've put that in, it seems like an outlier, but I've put that in because a lot of you here as fintech players are developing something that's fairly new. One thing of concern is how unique are you such that the product that you have reflects a market on its own. So one thing for you people out there, if you're developing something so unique that reflects a single market, then beware of anti-competitive behavior or conduct that would be governed by the Competition Commission. You've got the Personal Data Protection Commission. Likewise, under financial services, you'll be dealing a lot with data of users, names, bank details, addresses, things like that. So these things will be caught by the PDPA and its commission. The next regulator would be the Ministry of Urban Wellbeing, Housing and Local Government. This is relevant in the aspect of money lending because money lending license is issued by the local government. And finally, you've got the Communications and Multimedia Commission. I've included that in because a lot of the technology here is online. It's on the web, and along with it, you would have advertisements. The MCMC is involved in terms of regulating content of advertisements through their advertising code. So this is all just FYI about the relevant regulators, not all of them specific to fintech, but they are applicable to this industry. So what I'm going to do is I'm going to break it up to a few market segments. And within these market segments, I'll just introduce a bit about what they are. But then in the subsequent slides, I will highlight very specific legal points to consider under each market segment. I'm hoping that, because this is just a very short session, I'm just hoping that you would be able to take away at least one legal point according to each bullet point raised in the market segments. So first segment would be data and analytics, right? This is where a company would collect data so that it improves customer-facing purposes such as customer segmentation, product targeting, and pricing optimization. On the flip side of the services would be risk management. Using, for example, P2P lending, there would be a need to ascertain the credit worthiness of the participants. So here we have data analytics. So what are the legal issues related to data and its analytics? Number one, you've got personal data privacy, right? So the general rule is if you're going to use someone's personal data, you need to get their consent to use it. The one point that I'd like you to take away from this is, it's a very small point, but from my experience, I've seen a lot of startups out there copy and paste data privacy policies from foreign websites or whatnot. One rule you have to remember is that in Malaysia, you need to have it both in the English language and the Malay language. Typically, it's just copy and pasted in English and never translated into Malay. The second point is intellectual property. Now, you're here developing your product. You're employing a team. You see many faces out there with teams behind them. One thing that founders need to be concerned of is the protection of intellectual property created through the business. How you would try and protect it. If it's not registrable under with the My IPO, you can protect it through employment contracts. So it's very important. Takeaway here is very important for employers to make sure that intellectual property created through their business is protected through the employment contract, and is highlighted that it belongs to the employer, the company. Third point, competition and antitrust. Takeaway is this. Although we know that businesses, startups, will have to be extremely competitive to fight and to beat the big boys out there, but let's go a few steps ahead. At some point, it would be ideal for you to have a huge market share for the uniqueness that you stand for. In that scenario, you have to be careful as to whether you reflect a sizable market in the industry. If you do, then you have to be very careful about your behavior, especially when it comes to things like pricing. Right? You can't be abusing your dominant position and impose unfair pricing. Again, unlikely to happen in such a competitive industry, but just something for you to think about. The next market segment, automated advice, automated decision-making, automated product recommendation. This is something like robo-advisors, whereby there's an algorithm for a system to advise users on things related to, say, their wealth management, fund management. Now, what are the legal issues relating to artificial intelligence? Number one, licensing issues. Right? In the earlier slide, I talked about the Securities Commission and Bank Negara being one of the regulators. From what we hear, from what we understand informally, we understand that the Securities Commission is trying to drive and push forward regulations relating or governance relating to robo-advisors or the like. We haven't heard of anything of the same from Bank Negara, but that, I guess, remains to be seen under the sandbox development. So, point to take away from here is that ultimately, although you have a sandbox approach by Bank Negara, there could be other regulators that may be involved in the regulation of very specific areas of fintech. So always keep an open mind, speak to both regulators to see under which part you fall under. Data protection, as discussed, so I won't go through that. Negligence. Now, as artificial intelligence implementers, right? Your technology is there to advise, to recommend the next steps. And naturally, there would be some sort of professional advice, although based on some algorithm, there would be some professional advice, some professional outcome coming out from this AI. Now, with professional advice, you always think about what are the downside if you give wrong advice. In theory, there shouldn't be wrong advice because it's all based on a system. But following basic legal principles, when someone gives professional advice, there is always the risk of negligence. So if you have given advice without taking into account due care and consideration, and there's loss and damage to the user of that advice, be prepared for a negligence claim. To get around that risk, typically people get insurance protection. Next market segment, payments. Here we've got P2P fund transfers, and we've got P2P currency transfers. What are the legal issues? Main one, again, is licensing. Essentially, for money remittance businesses, this something comes under the purview of Bank Negara, Central Bank Malaysia. I won't talk about that again because of the sandbox developments that we have. When we talk about currency transfers, takeaway is there will be foreign exchange controls that are relevant. Basic rule here is that transfers between residents, i.e. between Malaysians, can only be in ringgit, it cannot be in foreign currency. Third point, because we're dealing with transfer of funds, one very important theme that comes up in the regulatory landscape is money laundering, right? Offhand, you would think of, shady deals, and you think, instinctively, intuitively, okay, that's something that's money laundering in nature. But one point I'd like to highlight is that money laundering or anti-money laundering conduct, it goes beyond just the very obvious things. I'll give you one example. The regulations say that, we can't you can't enter into transactions in respect of proceeds arising from unlawful activity. Now, the businesses that you're going to create are there to implement commercial activity, not unlawful activity. One category that has been identified as being an unlawful category is the transfer of funds arising from a breach of Section 132C of the Companies Act. Now, what is 132C of the Companies Act? Very basic position. It means that where a company disposes or acquires an asset worth more than 25% of its net asset, you need to get shareholder approval. Very basic thing in the Companies Act. But a breach of that very basic corporate requirement could result in an unlawful activity and therefore caught under the money laundering requirements. So it's very interesting for us as lawyers. I'm not too sure how parties will go about monitoring activities like that at face value seem very consistent with corporate transactions. Anti-bribery. Now, another point about dealing with money is that you have to be careful with who money goes to and where money comes from, especially for what purpose. Now, I think I won't go into the details of what falls or what is conduct that is of bribery in nature, but one takeaway for you is that if you are accused of being involved in a conduct that relates to bribery, the evidence or the presumption is that you are guilty of it. So it's unlike normal criminal law where you are innocent until proven guilty. For bribery conduct, you are guilty until proven innocent. Also, to go back one step to anti-money laundering, one thing for you to be aware of is that the penalties also apply to directors. So if there's a breach of your AMLA requirements by a company, directors are also personally liable for it. They could be exposed to up to 15 years imprisonment. So that's a huge deterrent. KYCs are very important because if you're going to try and protect yourself through AMLA and anti-bribery transactions, you need to know your client. The question is, how much detail do you need to sign up a client and to enter transactions with the other side? Bank Negara at this stage has their own requirements on KYCs, so it's best that you check with those existing requirements. Finally, on this point, you've got e-commerce transactions and digital signatures. Great to know that Malaysia has been progressive since 2005 or 6. They recognize online transactions. So it is safe to enter into online transactions in Malaysia. You will be protected. Next market segment would be digital currencies, i.e. virtual currencies. This could be your e-monies or whatnot. Again, you need to ensure whether you need to get approval or to be licensed by Bank Negara to conduct activities like that. There's also a question how you regulate the technology itself, for example, blockchain. So just to share a bit, we understand that the Securities Commission is moving towards identifying appropriate controls for blockchain technology. We don't know how much Bank Negara will be involved in this process, but I guess there will be some level of communication and collaboration between them. AML and KYC, I won't go into that. That's been talked about earlier. Next market segment, crowdfunding. You've got equity crowdfunding and P2P lending. These are the only two licensed segments of crowdfunding in Malaysia, both of which are regulated by the Securities Commission. Some very interesting legal issues with it. And I think I'm going to elaborate a bit more because it could be a reflection of how the sandbox will develop and interact with existing legislations. So let me start with equity crowdfunding. Equity crowdfunding allows private companies to raise funds from the public, right? This is very counterintuitive to existing legislations under the Companies Act. Under the Companies Act, private companies are restricted, they are forbidden from offering their shares to the public. But somehow the Securities Commission says that's okay, we're licensing equity crowdfunding activities. At this stage, we haven't heard anything from the Companies Commission Malaysia as to whether there are going to be any issues with it. They seem to be cooperative. But I think this is the direction of development of fintech in Malaysia. There may be one regulator that facilitates, encourages the development of an aspect of fintech, but it may sit very uncomfortably with another piece of legislation that's governed by another regulator. So is that regulators do recognize some limitation arising from current legislation. And they're saying, go ahead, just try and find solutions to get around it. But there's always communication with them. So I think they wouldn't be taken by surprise when those developments come in, i.e. trust arrangements, nominee arrangements. Okay, so what's the development today? We've got the Bank Negara Regulatory Sandbox. It's not in effect yet. The consultation period closed on the 30th of August, so Bank Negara is still reviewing and coming up or fine-tuning the sandbox. So what do we do now? I would suggest that you don't just take advantage of this situation and have an Uber mindset where we say, we'll just grow quickly now, and once Bank Negara has that sandbox, will be so big that they have to accept us into the sandbox and protect us. I think the way to develop the industry more healthily is to always engage with your regulators, be it the Securities Commission or Bank Negara Malaysia. Get involved with them. But the takeaway here is know who you need to speak to, because getting into a sandbox with Bank Negara may protect you on one aspect of the business, but it may not necessarily protect you on other aspects of the business, which is not regulated by Bank Negara in the first place. For example, capital markets products, securities products, those are under the Securities Commission. So please do not get confused in the application of the sandbox. So moving forward, the conclusion is this: more often than not, fintech is going to be regulated somehow by legislation. There's going to be all these fintech regulations generally have a very broad and catch-all type of approach. So more likely than not, you're going to be caught by it. if you want to be creative and try and wriggle around it, I mean, try to think twice, trying to see whether you can qualify for the sandbox, right? And in any event, in doubt, reach out to the regulators, and also try and seek professional help when you do so. Okay, so that's the end of my presentation. I'll be around for questions if you have any.